So welcome to the final module in our blockchain subject in the course. Now in this module, we're going to be touching on the Internet of Value and token economy. Now briefly, just before we begin this module, I do want to highlight that this course is not necessarily about the Internet of Value and token economy. Okay, we're going to briefly go over what they mean and how they fit in with the world of cryptocurrency. But if you want to do some more research, by all means go ahead and do so, as this course may not go into as much detail as you may want to go into. Okay, so we're just going to touch on how this links in with the world of cryptocurrency. But more importantly, we're going to make you aware of the Internet of Value and the token economy, okay, as an addition to the cryptocurrency world. So briefly, the contents of this module, we're going to go over the value revolution that's taken place. Okay, we're going to touch on the Internet of Value, or IOV. We're going to look at the very first value offering within this Internet of Value. We're going to look at how value is now being quantified in new ways. Okay, we're going to go into the token economy and applications of what tokens are. Then we're going to look at old payment dynamics, tokens versus fiat currency, and then we're going to look at a fair payment dynamic, okay, linking those three together. So firstly then, the value revolution. So Internet 2.0, the current internet, is just simply the exchange of information. Now yes, you may find value in that information. However, it's very limited to what types of value you receive from the current internet. Okay, it's more of an information exchange than anything else. Whereas the Internet 3.0, which this blockchain technology is working towards, okay, which is enabling us to go into Internet 3.0, it's actually the start of the exchange of value. Okay, quantified value, which has never been done before. Now you might be thinking, well, how is this possible? Don't worry, we're going to explain it in another slide. So the Internet of Value, or IOV, okay, on Internet 2.0, we essentially disrupted every industry. And what I mean by that is companies like Amazon. Initially, Amazon was a bookstore, and by bringing books online into the digital world, Amazon completely destroyed brick and mortar bookstores. Okay, we're disrupting industries, and that happened across essentially every single industry. Okay, to the point where the shared economy is almost destroying the hotel industry. Okay, as we can use apps like Airbnb to go and live in someone else's home. Okay, and now Internet 3.0, or the Internet of Value, okay, as Internet 3.0 will enable us to do and achieve, is essentially going to start disrupting the disruptors. We're going to start another evolution in disrupting industries. We've seen it done once before with things going digital, and now we're going to see it happen almost again in some industries. So then, in terms of value, it's really important to link this to cryptocurrency. Okay, the very first initial start of the of exchanging new types of value in the new internet, or within the new internet, is Bitcoin. Okay, it's currency. And obviously the first blockchain technology was used for the simplest form of value. It is currency. Okay, we find value in digital currencies. Okay, and this leads us on to other tokens and the token economy, where we find even more value, which we'll get on into a second. So, with the new internet, we can quantify value in new ways. Okay, and as we start this process of datafication, and we start harnessing data from things which we've never harnessed data from before, as we connect appliances, for example, to the internet, okay, we start to quantify value in new ways, and tokens are a perfect resemblement of this value. Okay, so the Ethereum blockchain, we're going to link it back to crypto. The Ethereum blockchain allows us to create tokens, and companies will give these tokens specific attributes and values. Because tokens are digital, we can encode certain attributes and values to those tokens, and we can use those tokens as much as we would use a currency. However, instead of the currency being purely utility based, which our current fiat currency is, okay, because currently the pound, the dollar, buys products and services. We have no other value to buy apart from products and services. Now, if we want to find more value, we might want to look for a fair trade product. Okay, I'm going to use fair trade as a good example. We have to actually look and see if the product we are buying is fair trade. Whereas with the token economy, we can now assign a token the values of being a fair trade token, and only fair trade products may be bought or purchased with that fair trade token. Now you might be thinking, well, why would we do this? Well, because the value offering is fair trade, okay, and we're supporting farmers in maybe third world countries, for example, or a fair trading system even within your own country. Okay, we're giving the currencies a new form of value. And remember, these currencies, we're going to call them asset currencies. So this token may be considered an asset as well. So you may want to invest some of your currency into a fair trade token, because that token represents qualities and values and attributes that you believe in yourself. And if a community is built around these values, then what happens to the token? Well, it goes up in price. Remember, we're following the attributes of assets here as well as currency, and we're going to get onto that in a later slide as well. So if multiple people believe in a certain value which a token is built upon and coded within it, then the value of the token may increase, which means your funds may increase. Okay, the value of the equity value of your currency will increase, and you can buy more fair trade goods. Okay, and that's the why. That's the most important thing to understand about this. It's values, shared values, that we can quantify in new ways with new currency. Okay, so as I've just said, fiat currency buys utilities and products, whereas token currency can buy natural, social, or cultural capital. Okay, we can harness these values in new ways, and we can assign them to currencies and assets called tokens. Okay, tokens will harness the motives of people, not just for financial reward, but for a multiplicity of values. Okay, fair trade is just one example of these values. Okay, it's the easiest to kind of comprehend and understand why someone might want to do that. So token application. And we're going to talk about asset currency. So token prices represent the value of a company and will float on the crypto market. Okay, these companies, again, we're going to use fair trade or maybe vegan products, for example. A vegan company might have a vegan token, and only vegan products can be purchased with that token. Yet that company may float the value of their business on the crypto market, okay, through an ICO or an initial coin offering. So they go public on the crypto market instead of the stock market. We're starting to see these changes. Hopefully you're starting to link these changes together in your mind and see this potential that is coming. Okay, so these same tokens will be also used as currency, so workers can get paid in both currency and equity, okay, or as an asset rather, allowing workers to be paid with the asset. And that leads me on to the current payment dynamic, or the outdated payment dynamic. Okay, the divide between the workers and the rich, the super rich, okay, the wealthy, the business owners, the capitalists. Okay, so company A, for example, uses fiat currency. Now this fiat currency, the workers work for an hourly rate and that's their income. And unfortunately, we've got a red decreasing arrow there to show that this currency is fiat currency. It's being inflated. Its purchasing power is decreasing over time. And then on the right, we have the capitalists who may own these tokens, okay, or own assets rather, not necessarily tokens, but they may own assets or business equity, and that will increase. Okay, as their investments increase in value over time, they produce more financial reward for themselves. Okay, and this is the old payment dynamic. The capitalists are making money on their businesses, whereas the workers, okay, the capitalists are making money through, they are essentially outweighing the scales of inflation because they're earning so much money. Okay, for the value of their stocks or their company increasing. Whereas the workers who work for that same company are working for an hourly rate, which doesn't combat inflation or the decreasing purchasing power which is happening to them. Okay. So if we look at tokens versus fiat, fiat is a liability currency in a sense. Okay, it's decreasing in value. If something is taking money out of your pocket, it is a liability. So what if the currency itself is taking money out of your pocket? And then we have crypto asset currency, which again we can assume is or we could call it the equity of a company. Okay, in terms of tokens, not shares or stocks or shares. Okay, so these tokens represent not only the value equity of the company and the values and attributes that company holds, okay, those fundamentals, but it also doubles as a currency to be used by the workers. Okay, so those workers can exchange that with other currencies, other value offerings if they want to. Okay, so there is still the freedom there to convert their currency into other currencies or tokens into other tokens. However, we start to see that crypto assets, because they are 2-in-1, asset and currency, we start to see a fair future-proof dynamic of being paid, okay, payment dynamics. So with a fair payment dynamics, company B, for example, uses cryptocurrency to pay their workers. Okay, so now the workers and the capitalists, they're on the same grounds. The workers work for an hourly rate, yes, but they also get the capital gains as an income because the token value of their currency may increase in value as more people believe in the values of that token. And again, with the capitalists, the investors, the business owners, they still own the same kind of, let's say, shares, stocks and shares, but let's replace those words with tokens, okay? And those tokens represent the same thing within that company. And their investment value will still increase, hopefully. Okay, but when it does, their capital gains that produce which might produce their income, for example, it's the same process which is happening to the workers. So the workers get paid the hourly rate, but if the company value doubles, well, their currency doubles as well. The currency value doubles. So we start to see this fair payment dynamic with the token economy. Okay. So in a nutshell, very briefly, that was the Internet of Value and Token Economy module complete. And with that being said, that is the blockchain subject of this course complete as well. So hopefully we have a better understanding of the blockchain as a technology and also the future applications of blockchain technology. Okay, so moving on to the next subject we're going to get into, or the next half of the course, we're going to get into the really good stuff, okay? We're going to start learning about Bitcoin. We're going to start learning about Bitcoin's blockchain and also Ethereum and Ethereum's value offerings, okay, with their token and their smart contracts, okay, and their decentralized applications. So some really, really good stuff ahead. I will see you in the next subject of the course, which is Bitcoin.